I'm going to introduce Kaaren Hall. Kaaren has spent 17 years in the broadcast industry before moving into the real estate and mortgages. She took her 20-plus year of mortgage and real estate experience to launch uDirect IRA Services in 2009, which I am a customer. She serves in various leadership roles in organizations like the Retirement Industry Association and the Council on Aging, Southern California. Kaaren, welcome back.
Thank you so much.
Oops. Oh, that's for you.
Thank you so much, Bruce, and thanks for everybody for waking up on Saturday morning to join us. You know, if you know me, you know that my industry is self-directed IRAs, and if you've been paying attention, you know that there's been a lot of talk about what Congress might do with self-directed IRAs. And so I'm happy to say that the House Rules Committee, yesterday or the day before, took those proposals out of the House bill. So we were concerned about a couple of things. We were concerned about being able to invest in not just private equity, but private placements like Reg D offerings. And we were also concerned about the continuation of called the Checkbook IRA, the IRA-Owned LLC. But those proposals have been removed. So that's wonderful. They're out of the bill. Now, of course, that bill is going to go to the Senate, but with those proposals not in it now, we don't think that the Senate, in their wisdom, will add anything back. So we're about 99% out of the woods. So we'll wait and see what the final analysis is, and we will probably see that around Thanksgiving. I guess from what I hear, they're eager to get this all wrapped up by Thanksgiving. So with that, I'll go on with my regular presentation. uDirect IRA Services, we help you self-direct your IRA or your 401k. And, you know, what we do is we take you from soup to nuts, I mean, from beginning to end with a self-directed account. What we don't do is offer tax and legal advice. And that is one of the reasons that I'm so honored and happy to be working with the tax and legal professionals that we have on our program today, because they're great resources. You'll have so many questions when it comes to investing, and these people are the people that you can count on. So moving forward, we'll talk about just the self-directed IRA process in general. With self-directed IRAs, they're all about saving for retirement. You know, with the self-directed IRA, you can take the money that you have from your previous employer or maybe even an IRA that you have, and move it over into a self-directed account. It could be, well, one of a lot of different kinds of accounts: traditional, Roth, SEP, simple, inherited IRA. That happens when you pass away, you pass your IRA on, or a solo 401k. So all of these account types have different rules, but it's all about saving for investment and saving for retirement. So when it comes to what people have in their retirement accounts, as a nation, if you want to go ahead with the next slide, as a nation, we have some $35 trillion in retirement savings. It's amazing. So let's forward there. Yeah, there we go. Something like, well, the number is about, between $31 and $35 trillion in retirement savings. Thanks, Aaron. So a lot of people still even haven't heard about self-directed IRAs. It could be even lawyers and CPAs haven't heard about it, but you've been able to self-direct your retirement savings ever since IRAs were created through the ERISA Act back in 1975. So that's great. You've been able to do this for longer than a lot of our audience has even been alive. It's nothing new. It's tried and true. It's been around a long, long time. So the difference between a typical IRA and a self-directed account, and this is something where people will feel confused sometimes, but a typical IRA invests in correlated assets, correlated to the market. But a self-directed IRA is going to be investing outside of the market into alternative assets like real estate and notes. It could be, again, private placements. Could be so many different things. Even, who knows, double-decker mobile homes. It could be so many different kinds of things. So alternative assets not correlated to the stock market. Now, when you invest, of course, you have to do your due diligence, and I'm sure that all of our investors out there know what I'm talking about. You want to make sure that the asset that your IRA is investing in is actually owned by the person selling it, for example. Or you want to Google the name of the asset sponsor you're working with and find out if they've ever been incarcerated. And it sounds simple, like, of course you do, but a lot of people don't, and they get in trouble. So you want to make sure that you do your due diligence. It's so easy to do it with the internet. just get on and Google the people you're investing with just to make sure, and that you've done your homework. If your IRA were to invest in a toxic asset, an asset that doesn't pay off, you don't get to write that off on your taxes, unfortunately. It's just a loss. Very hard to replace because of contribution limits in these retirement accounts. So, start up front and make sure that you've done your homework about your investments. When it comes to self-directed IRAs, when the IRS came out with them, they said that you can invest in anything except life insurance contracts and collectibles. Well, and that's great. I mean, that just leaves the door wide open for different kinds of asset classes. So that is what the IRS says. And then you go down a level to the custodian, and custodians will have different rules about what they say is administratively feasible, what assets that they are willing to custody as a business decision. So you need to ask your custodian if they are willing to, custody the assets that you have in mind. We have to talk about the rules, We have to talk about the rules when it comes to self-directed IRAs. And you can find some of the rules on the IRS's website, irs.gov. And a couple of years ago, they split up Publication 590 that talks about traditional and Roth IRAs. They split it up into 590A and 590B. And I'll tell you what, it's pretty easy to read, and it's really good information when you need to find research. But that's one of the rule books. And it says that basically you're not going to borrow money from an IRA. You don't use it for personal use at all, and a few other items that we'll cover. One of the things about IRAs is that some people are allowed and some people are disallowed, or qualified or disqualified to your plan. And we'll explain what that means. But first, we'll explain who that is. Those people are your lineal ascendants and descendants. So your parents and grandparents, you and your spouse, your children and your grandchildren. Also, any 50-50 business partner would also be disqualified or disallowed to your IRA. It would also be anybody who has a fiduciary duty to your plan. So good to know. Now, here's how we put that all together. The qualified people, by the way, are the people out to the sides on the family tree, right? So it's okay to invest, your IRA can invest with your neighbors, your cousins, your brothers and sisters, nieces and nephews. That's okay. So with prohibited transactions, I like to think of it as a game of keep away, right, from prohibited transactions. That's how you win the self-directed IRA game. These prohibited transactions can sometimes be surprising. They might come out of the blue, and you might not really realize why something is disallowed or disqualified. But basically, neither you nor any of those disqualified people can have personal benefit from the IRA. Present benefit, personal benefit, indirect benefit. You can't have that. It's all about later. It's all about saving for retirement. And of course, you're not going to buy, sell, or exchange property between your IRA or your solo 401k and any of those disallowed people. So when I say that, I mean that your IRA doesn't buy a property your parents own. Your IRA doesn't make a loan to your children to go to college. They're disallowed people, so your IRA doesn't do business with them. But finally, basically that a disallowed person cannot provide goods, services, or facilities to the plan, okay? Where do we come up with that? That's another one of the rule books. It's written in IRS, the Internal Revenue Code, actually, IRC 4975. And that's where you can read all about prohibited transactions. So if you've got a deal and you wonder, hey, could this be prohibited? This is what we do. Call us. Talk to us about your deal. We want to know about who are the players, where's the asset, and to see if it is a prohibited transaction. We're always happy to have that conversation with you. So if you're going to play a game to win, you need to know who the players are. And of course, you as a self-directed IRA holder, you're holding all the cards and you're driving the bus, right? But you've got the IRA then, and the IRA is a tool that you use to invest for your future. And then there's uDirect IRA Services. And when I founded the company in 2009, as Bruce was saying, I enlisted the services of a trust company custodian to hold our clients' funds. So these are the players in the self-directed IRA game with uDirect IRA Services. Most of us on this call or on this, presentation today are real estate investors. So let's talk about that. When it comes to real estate and investing with the self-directed IRA, there are pros and cons. And it's fair just to talk about both, right? I think the biggest benefit to self-directed IRA investing in real estate is the fact that when you invest and then say have a liquidity event, you pay off and here come all the proceeds, they're not diminished by tax. all those proceeds and your principal and your proceeds can go back out into the next deal. And so you compound faster. And that's really one of the reasons to use a self-directed IRA to invest in real estate. Now, the downside of it is that you don't get the same write-offs in an IRA that you get when you invest personally. And Matt and Amanda will cover some of those. If they don't cover them today, I'm sure they'd be happy to cover them one-on-one with you about some of the benefits there. But basically, the downside about investing in real estate with a self-directed IRA has to do, of course, you don't get the benefits. So there you go. You're solely responsible for the gains and losses. And because you are choosing the asset, it is truly self-directed. Now, your IRA can borrow money. And Bruce also mentioned that I spent about 16 years in the mortgage industry, the residential mortgage industry. When I made the transition into self-directed IRAs, I was very surprised to find out that a bank would make a loan to a retirement account. It's a sort of commercial loan called a non-recourse loan. And if you'd like a list of non-recourse lenders, we'd be happy to provide that to you. You can email us at info@udirectira.com. We'll send over the list, no problem. It's not a list necessarily of companies that we endorse, more so it's a list of people that we provide for your convenience, right? So we're happy to do that. But basically with a non-recourse loan, there's no recourse against you personally and no recourse against any other assets in the IRA if your IRA were to default on that loan. So keep that in mind. These lenders require a larger down payment. So it's always based on, underwriting risks. And so the various lenders can tell you what their underwriting criteria are. When your IRA borrows money, though, there can be a tax, and that is a tax on the proceeds. It's called UDFI, Unrelated Debt Financed Income Tax. That is a great topic for Matt and Amanda to cover with you, but just be aware of that. When your IRA borrows money, the proceeds are going to be taxable if there's leverage. And so you just need to know that going in, again, if you want to win the self-directed IRA game. There's another kind of tax, kind of a twin tax called UBIT, Unrelated Business Income Tax. And that occurs when your IRA invests in an active business. So since I don't provide tax advice, let me just at least tell you where you can go and find out more about these twin taxes. You can go to irs.gov, publication 598, and read about these two taxes. When you pay the taxes, your IRA is going to pay them. Your tax professional will create a 990T. Your IRA will pay the tax, and there you go. And then you can live to self-direct another day. There's a tool in the self-directed IRA industry, and it's sometimes called the Checkbook IRA. That's how people typically think of it. It's really an IRA-Owned LLC. And so to describe it, first you have an IRA, and then you have an LLC, a special purpose LLC, as one of the assets that the IRA holds. So you open an self-directed IRA account, you fund it, you have a third party create a special purpose LLC. Your IRA will fund the checking account of that LLC, and then you can use that LLC to invest your retirement assets, but you have to follow the same rules that every other self-directed IRA investor does. No prohibited transactions. It's a tool that you can use. Not every self-directed IRA company allows it. We do. And so for more information, again, we're happy to chat with you about that at uDirect. When you open a self-directed IRA, I have to say, though, that a checkbook does not necessarily come with the plan. So just know that it's an asset, a special asset that your IRA acquires. So it's not a gift with purchase. Different kinds of IRA plans and retirement plans. We say self-directed IRA kind of as like a blanket term, but it means all these things. It means you can self-direct a Roth just as easily and in exactly the same manner as you can self-direct a traditional IRA or a simple or a SEP or a solo 401k, or even an HSA, a health savings account. We offer that at uDirect IRA Services. So how do you do this? How do you self-direct? When I very first got into the industry, I thought, well, I need to really think of an easy way to describe this. So I thought, well, it's really 3 steps, isn't it? You open an account. That's a process. You fund the account. That's another process. You get the money in there. And then you invest. So opening an account takes, just a few hours to basically put all together. Then we give you a login to your account. It's online, and you can always go in and every month save your monthly statement, and you can check and make sure that your proceeds are coming back the way that you want, because it is self-directed, so you have to stay on top of it. Funding the account, pretty simple. It's either a contribution, or it would be a transfer, an IRA to IRA transfer, or a rollover of a previous employer plan. That's how you get the money in there. And then investing, you provide us the documentation, we review it, assuming everything looks good, we fund and record, or the asset records if it's real estate. You get your keys if it's a house, your tenants move in, and then 100% of the proceeds from your IRA-owned asset go back to the IRA account that owns that asset. And any expenses of that asset are paid for by the IRA. Super important to know. So with that, I'm going to turn things back over to our MC, and we'll take it from there. For more information, you can go to uDirectIRA.com. We're also on social media. We're on LinkedIn. We're on Facebook. We're also on Instagram, everywhere. So we hope to see you again. And again, please call us with any questions.